We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Webull. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Webull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show.
Hey everybody, welcome back to another live stream. I hope you're doing well, and I hope you are staying safe in these crazy markets. You guys know the it seems like every day it's like the market's just shooting back and forth on a bunch of stuff. Real quick, let me just make sure my audio sounds okay. I think you guys should be able to hear me. Sometimes when I'm streaming from home, it has a weird thing where it switches my mic over to the wrong one. Anyways, let's take a look at where markets are at here as we get started. Today's trading session, we are starting out with a strong pop here in stocks. We've got NASDAQ up 0.8%, S&P 500 up 0.5%, the Dow Jones up a third of a percent, the Russell's up 0.4%. And Russell looks just like a beast, man. It looks like such a beast right now. And I'm loving it because, again, this has been, I guess the third time's the charm, they say, right? The last few years, I've thought, hey, you know what? I think the Russell could have a little bit of a run. And almost every time, it ended up trailing me out or stopping me out for, not very much of an impressive move. Well, this year, Russell seems to be off to a really great start. And the Russell, for people who are newer to like indices trading, they may not know, or you may have never heard of, quote unquote, the Russell, right? And the Russell 2000 index is just, it's sort of a bellwether indicator of a huge chunk of companies that are not necessarily just the big ones, right? So it's a bunch of mid and small sized companies within the US economy that are more sensitive to certain things, but also have more potential for growth. And the Russell is a very fascinating index. It's one of my favorites to keep an eye on because you're talking about smaller companies. And if you think about it, there's a lot of potential for smaller companies to have a lot of upside growth. When a company is still, in its heavy growth phase, it has potential to have a significant amount of upside potential. Well, there's double-edged sword there. Companies that are much smaller and still growing are also more fragile and sensitive to what's happening in the economy, what's happening in the interest rates world. So Russell is it's an index that I really like to trade. I've traded it for a long time, and again, you can catch some very volatile moves. The Russell index is more volatile than the NASDAQ. It is more volatile than the Dow Jones and the S&P 500. The implied volatility on this thing is generally higher than if you were to trade, NAS contracts in the options market, right? So you have a lot more volatility here, and with that comes the double-edged sword. When it moves nice, it can be a great runner, and this actually, it's not as big of a trade for me in terms of allocated size, but it is a even better trade for me in regards to a risk to reward basis. The Russell 2000 has broken clean through the all-time highs. Meanwhile, the S&P 500 is stuttering around all-time highs. The NASDAQ is still well off of its all-time highs. You've still got, you're still down 2.7% from the all-time highs. And the Russell is right there. It's at an all-time high as we speak. So I like that relative strength when it comes to the Russell 2000 index. And it's been a really good trade to start the year with. Russell's been very good to me. It's been a winner. Russell strong. Nick, can we go over the put to call? Fabian, you ask all the time. Do you have the Edge Finder? You should just pull it up. I think you've asked me that like every stream for the last 300 streams. If you go over to the Edge Finder under crowd sentiment put call ratio, you can take a look at the latest options volume here for the S&P 500. You can, of course, select all sorts of things. S&P 500 is pretty neutral as of the latest data. I'm curious to see what gold has. And look at this, gold getting a lot of call volume. So this makes me a little bit cautious. Now let's explain what we're looking at. So if you have the put call ratio open, what this is going to show you, it's going to show you options flow. And we've mapped this out in a way that I think is pretty useful. A lot of times you can pull up put call ratios all over the internet, but what I think is really important is you actually have some measurement of what extremes look like for the particular asset that you have open. Put call ratios trade differently for different assets because, without getting too into the weeds, some people hedge more on gold. Some people, they use the options market for different reasons. People hedge, people speculate, people, build complex strategies. And certain assets have different kind of put call ratio ranges that they generally trade in. So we have this high put and high call volume lines that we've added in. And they use a mathematical formula, basically using standard deviations to determine where the extremes are. By the way, my hair is going crazy today, as in like it's not cooperating. But anyways, put call ratio right now is really low for gold. So what does that suggest? Well, that shows us that on a relative basis to recent trading history, there has been a surge in call volume when selecting for gold. And I love this stuff, man. I absolutely love tracking sentiment tools because, that's where Edgefinder started. The macro stuff came later because it was a way heavier task to build macro scanners. The Edgefinder started with a lot of sentiment tools. I was like, I want to track crowd sentiment. I want a tool that tracks it. And then macro became heavier and heavier and heavier, and now it dominates the scoring. For good reason. Macro is super critical. Sentiment still matters a lot, though, too. And when we see gold getting high call volume, that's catching my attention here this morning. I heard Nick made a killing from gold. Look, yes, I did. I'm still in the trade. I could give a bunch of it back today. But also, what did I have to get through in regards to drawdowns, and win streaks, and lose streaks in order to get to where I am with this gold trade right now? Again, I say this all the time because I genuinely care a lot for the people who watch my content. I'm thankful every day to be able to do this. It would be unfair for me to say, hey, I am up almost $70,000. In fact, it might be more than $70,000 on this trade. But you can't just look at this. You can't just look at that one trade. That's, I think, a little unfair. And I've seen content creators all the time do that. And I don't think that's fair. I have a $70,000 trade floating on gold. It's ridiculous. But to get that $70,000 trade running, what did I have to do before that? Well, lose 5K over here on a trade idea, lose 7K over here on a trade idea, lose 5K again, make 5K, make 5K, lose 5K, lose 10K, plus 20K, plus 0, minus 5K, minus 10K. I'm just giving you an example. And then finally, hey, we caught one. We caught a big one. We caught a really, really big one. And the reason I think it's so important that I tell you this is because if I only show you this, then what that paints in your head as a beginner, because I used to be exactly in your shoes if you're new to this stuff, it's unfair for creators who are in the trading space to only show you this as if that's a normal occurrence. This gold trade is ridiculously rare for me. I wish I had these trades all the time. I wish I had 10R trades on the Russell running all the time. I don't. And there's also times, guys, in 2022, I went through a drawdown of 30% of my account publicly. I was down like over 100K at the time. My account was smaller at the time, but still 100K. It sucked. So look, I'm up a lot of money on gold right now. It's a wonderful trade. And I've paid my dues to finally catch a really good runner, right? So I just think that's important. When I talk about a gold trade that's running hot for me, it's only fair that I give you the context behind what strategy I use to get there. No strategy, by the way, what I hope you gather from that is no strategy is just going to magically get you these kind of trades all the time. Nothing. To get these kinds of trades, you're going to have to stop out, stop out, stop out. Little winner, oh, stop out. Little winner, all right, take a little bit of profit there, you're out. Okay, stop out, stop out, stop out. Boom. That's what the sequence looks like. Do you understand? It's not fair for someone to show you only that and say, that's what I do all the time. Right? So that is really, really, important to me, that when I talk about this gold trade, it's a wonderful trade. It's been amazing. I'm going to keep managing it. But there is context that is really important. Nick, look at silver's high put ratio. Yeah, let's take a look at silver. What about silver? Silver. Whoa. Thanks for bringing that to my attention. Silver has the opposite extreme. Huge surge in put volume on silver. Silver, that actually makes sense. So yesterday we saw a huge surge in put volume, right? Because remember, put call is 1 day delayed. You get the data from yesterday today. Doesn't mean it's useless. It's just not, when we look at the put call ratio for silver yesterday, it looks like people got faked out hard. Like, look at what happened intraday. So people are in there betting big on puts, and then boom. It just happens way too often. It happens way too often not to be deliberate. Put call ratio is a really interesting indicator for that reason. I'm going to pull up our Forex factor here. We got unemployment claims coming out. Oh, and GDP numbers. All right, we got a little something here to potentially move markets here as we get started today. Final GDP numbers coming out in 15 seconds. I'm going to switch over to our all markets view just so we can see. I am curious about that GDP number. Claims too, unemployment claims, but very much interested in this GDP number. Let's see what we've got. S&P trending higher, NASDAQ up, Bitcoin up, Dow up. Oil's down this morning. Interesting. May also have something to do with the indices. No immediate reaction here. Just pull open. Okay, unemployment claims came in slightly better than expected. And final GDP, 4.4%, man. 4.4%, better than expected GDP, better than expected unemployment claims. A little bit of a bounce taking place on the US dollar at this time. Okay. Thank you, Ivan. Good to see Ivan in the chat. Yeah. Little bit of strength here for the US. 4.4% GDP. That's very strong. I mean, think about this. There's not other countries, like big Western countries are not putting up 4.4%. That's where, I get the bear case for the dollar index and this uncertainty around trade. I get that. But at the same time, I'm not just like a dollar's going to crash guy either, because like the GDP growth, the economy of the US is still relatively very attractive to the other, kind of like look at Euro GDP, et cetera. By the way, we'll bring in my friend Chris Pulver here. Take a look at markets in just a second with me. We'll get James to set that up for us, the lovely producer behind the scenes. Let me go economic growth. I want to look at GDP growth. I just wanted to look at Europe in comparison. What's up, Chris?
Hey, Nick. Good morning.
Good morning. So, okay, we have Euro. I was just comparing Euro GDP. Like you can see, like they've got little growth compared to the US. And I was just making the case, Chris, that it's like the US dollar, it's been stuck in a range, and I feel like it's for good reason. You still have like outsized growth in the US compared to other places. Inflation's still relatively sticky. I just don't have a strong directional bias in the dollar right now. And I feel like that's maybe the source of why currencies have been very quiet for a while. You don't have an obvious like, oh, Fed is hiking rates, Fed is cutting rates. There's not like a strong directional bias. Is that fair?
It's fair. I think that's probably the safest trade too, is nothing really stands out as a big wide open space. I mean, dollar dollar index DXY is essentially stuck between like 96.50 and 100.50. I mean, from my chart, this is what I could kind of make some sense of as far as technicals is when we put in that bottom with the September rate hike. To me, this is a 50-50 shot. And I don't really care what direction I would call. Like that's a coin flip trade. That's not really a probability trade. Since we broke this low, this is probably the more surprising move. I think you have like, better reward to risk with that trade, just because everyone would be like, the narrative is bearish the dollar, and yet somehow it surprises. However, I think dollar bullishness has to come with some risk off trading. And after yesterday's, taco trade, and today's market's up, 0.6%. Mags are up over 1%. It's like, I mean, it's hard to see risk off right now with another solid, solid day ahead of us, unless it's going to be like a big gap up and then they faded all day, which will kind of be revealing. But we clearly backed off the escalation of geopolitical stuff. The U.S. is kind of bouncing right back. RSP probably, I don't know, man. I think I'm going to start. It's not as good for options like it would be on SPY, but I think as far as getting some allocation in and trying to tip this like equal weight, I think this could actually be a good thing, because this will suffer less if mags are sideways or flat. Equal weight should be better if we're having this decent market breadth rotation this year.
Yeah, and I just pulled up mags versus RSP just to have the chart in front of us. It's interesting. You can really see that. So this is mag 7. So for new listeners, that's going to be your Amazons, Microsoft, et cetera. By the way, Microsoft's getting hit hard here recently. Versus RSP, which is the equal weight S&P 500. S&P 500, but equally weighted. So you put $1 in all 500 stocks rather than, $9 in NVIDIA or whatever it is. So, you can actually see, to your point, Chris, you've got a little bit of just like a very straightforward technical momentum breakdown here, right? You've got kind of a head and shoulders type looking chart. And breaking through structure lows. I mean, I know not a lot of people necessarily have eyes on this, but technical analysis is kind of universal. It's like a really simple concept. It's like, okay, you've got big technical momentum shifting here, and I don't think it's coincidence that it's happening on the start of a new year. Really, like you're having some shift in risk to reward for traders and investors. It seems like.
Yeah, if you flip that chart upside down and you go RSP/mags, if you want to look at a bullish pattern, it's like, well, if there's a decent bottom, you can see it pretty easily on that chart. Just flip it around. We got a clear breakout. I've got a series of moving averages that everything's moving upwards. If you do the same thing with IWM by mags, you got the screen. Yeah. So look at. It doesn't matter. Here's the bottom. So flip it around like we did, and pretty solid bull pattern. It's like, if this is head to shoulders, left shoulder, head to neckline, we're breaking out. That's encouraging. You compare this also with Russell. Not going to lie, I like Russell less. I think that Russell has lots of potential. I do think that, I mean, it's screaming higher, which is an awesome move. I mean, if you're long the Russell, you're up 6-7% for the year. I mean, it's already out of the gates pretty nicely. I've had a couple people calling for like 40 to 50% Russell this year. I'm like, that would be absolutely incredible. But does that mean I want to go all in on small caps? Like, hell no. So,
and that's been the Tom Lee call for like 3 years in a row, right? So
I know.
I mean, me too.
Yeah.
So I'm pointing out, I've thought the Russell would have more upside, but I never would make the claim of like, oh, Russell 40, 50% here in 1 year. Cause that's a crazy potential move. I do think that the Russell has upside. I think that the rotation trade can last for a little while. I think if nothing else right now, Russell's got legs because it's just got momentum, right? It's like, oh, out of the gate, we've picked a winner, or a horse has taken the lead, if you will. And a lot of people are going to throw money at that.
Sure.
So I'm kind of just trailing stops on it, but I'm still in the camp of if we had a larger scale correction or pullback this year, I would love that. I would love, I've got some cash on the sidelines. I'm really parked in gold right now too. So wouldn't mind it if we did get larger scale pullbacks. But in the meantime, that Nikkei trade starting out really well for me.
Good.
The Russell is continuing to run, and I'm just waiting for, see if we can get some larger pullbacks on indices. If we don't, then we don't.
Yeah. I put this vertical line on my chart for gold yesterday. So I know I've talked about this bar count for quite a while. I'm making a bit of a forecast here. This is not to be bearish on gold, but I'm just simply measuring the move. This end of March gets us to about 620 bars from the 200-day moving average. If we end up, I mean, we see some overbought conditions with divergence now. We go back to October 2023 was the last time we had the touch of this 200-day moving average. By the time we get to end of March, that's April 1, end of March, that's 630 bars. So all I'm doing is putting a vertical line to kind of timestamp it that said by this period, end of March, gold showing signs of correction to 200-day moving average. Now, I don't know. I mean, with this trade, and all of a sudden we start showing signs of a top or showing signs of maybe moving towards this 200-day moving average. I think that similar to what we saw this week already with like some noise in the market grabs onto it right away, and it's very disruptive. I mean, rates and yields were all over the place. Bonds were rattled. The equities market was down, 3%. It's going to be a noisy year, and I don't know what the next kind of catalyst would be if I'm right on this trade. Again, I'm not calling bearishness for gold. I'm saying this is where I want to be buying dips, but that's kind of the timing I look at is could we really, go like well over 600 bars without making some type of effort like we did back here. Last time we had a huge run, it was like a 20% straight drop to the 200-day moving average. So I just want traders to be prepared for that technically to happen this year. I don't know what the catalyst is going to be. I think that right now, what could be really, really interesting for 2026 is it could be like a stock picker's dream or nightmare. But if you're picking the right winners, you could have some amazing picks in 2026. I would say similar to what you do really well, Nick, is you pick a trade, you find a winner, you cut your losses off quickly, and you ride your winners as long as you can. That could be a fantastic way to play 2026. Hopefully it's not, terribly difficult. I'm not looking like in the weeds, but I'm talking like decent liquid stocks, not like, well, let me find something that's dirt cheap and it tries to go up 10x. It's like, I'm talking stocks that have, legitimate, the Russell's up 8% this year.
Yep.
So if we have indexes that can move, 6 to 8%, great. If we have individual stocks that can move up 20, 30%, I'm pretty happy with that.
Yeah. And there's a lot of that going on. There's a lot of, within this Russell move, you've got a lot of smaller companies that are just running for it, which is, it's interesting to see, that spread out. And I just looked at, yesterday in my video, I was pulling up the heat map, the S&P 500 heat map, and looking back 1 month to kind of give an overview of how we've done so far this year. And it is a very interesting Christmas tree looking chart. You have a lot of tech stuff that's not, been very impressive. And meanwhile, you have energy and basic materials and all these kind of left for dead areas of the market taking a run for it, which is, kind of cool to see a little bit of rotation on that front. And I agree with you. I do think that it's a bit of a stock pickers world right now. I also think that you could have some very different looking trends this year than the last. And one thing I just want to mention too, I thought this was an interesting point. So the midterm elections this year, I know a lot of people have talked about like, oh, that's going to cause some volatility, or maybe I've heard cases for both. I've also heard could cause some volatility. I've also heard that, Trump and team want to look good for the midterm. So they're going to do everything they can to keep the market up. Well, my thought process is like, well, if I had some dirty laundry to do right around this time, wouldn't it be better to do it right now, get it out of the way?
Yep.
And then I could sort of get the market to look good before November, because it is end of year stuff that we're talking about here with the midterm elections. Now, of course, campaigning is before then, but wouldn't that be like, if you're like, oh, there's some things we've got to take care of, when better than now to get them out of the way?
Sure.
And so that's where I think you could see volatility in the here and now within markets. Like, I don't know that volatility is just going to go right screaming back down to low teens and we're going to stay there all year. I think that the probabilities for Trump and team to do some of their bidding earlier in the year makes more sense than later in the year, personally. Like last year.
Yeah, I mean, and last year, how we got to Liberation Day was interesting. I mean, timing wise, it started to roll over a little bit in February. March was a pretty terrible year as all this was kind of coming up. March was a terrible month. And then April, of course, was like, well, he did what he said he was going to do. But how it was rolled out, the big cardboard sign and all the crazy tariffs that nobody had anticipated the numbers for. Everyone ripped apart the math afterwards and said they're just doing the numbers based on covering our deficits. So, and what happened, we just rolled it all back, and that was the birth of the taco trade, which still exists today. And I mean, literally you saw it in the last 24 hours. So I'm looking at the sectors here. I mean, I think what is nice is looking at this year's performance out of the gate. It doesn't mean that financials are going to lag hard, but like JP Morgan down a couple percent. Let's make sure there's some stability here, because you certainly don't want to see, XLF beat down a lot. You don't want to see Goldman Sachs, JP Morgan down, but the Mag 7 not really participating. These are market cap weighted as well, but information technology, communication services, your Mag 7 stocks are stuck in there, but it's nice to see, something different leading the way. I will say that this look to a bull market, by the way, is typically the later cycles, the later innings of a big bull market. So, if we have a strong, resilient 2026, that's great. But if we are led by these sectors, as we're showing the signs of for early 2026 now, this doesn't look good to continue further down the road. Like over the next 3 to 5 years, most likely there's going to be another kind of correction that's going to be needed. Who knows what that is, though? I mean, we could be SPX at 7,500. We could be SPX at 8,000. I don't know. So until the signs are there, technically, it's like, I just think this is a good way to show that not everyone's all in Mag 7 anymore. People are clearly trying to pull out of that. You're talking, 15 to 20 trillion dollars in market cap. It's like, well, maybe we'll just take like 1 or 2% of this and put it in, name your sector, put it in gold, put it in anywhere. So it's different. I think that's good. Stock picking could be very lucrative. Just obviously have a good plan. And I'd say, follow Nick, where you're cutting losses quickly and you're letting winners run, because if you get some runners, they're going to be fun to hang on to. If you get out of trades, quickly and don't let them cost you much, then just shrug it off. I mean, you're going to have some good trading ahead. It's just don't let any one narrative make you stick to like a stubborn plan. I think that's going to drive you crazy this year. If you're like, no, it's got to be bullish. I don't think so. If it's not showing it, I wouldn't be chasing stuff that looks bad.
Stocks have a really interesting, like when you're talking individual stocks, you get some very different stories than, like, for example, the index. When you talk about the index, like the index, you have the benefit of like diversification built in here. So you may not have as much upside in the index, but one thing you do have going for you is like a lot of these companies are going to do well. And if you happen, the dangers of stock picking, obviously, is that if you pick one that doesn't do well, this chart can look broken for so long. And like, for example, Chris, you and I know, I don't know how you did well with Pfizer, but Pfizer was a frustrating one for me. Where
it still is.
It's just been such a dog for so long. And it's like, hey, here's a company that makes a ton of money. And it's just been this this does not look like the index, right? So unlike the index, you don't have the benefit of diversification, but unlike the index, you do have the advantage of huge upside if you're right about something. So like, for example, if you're holding Pfizer, and let's say, I'm not sure what would do this, but let's just say it, goes on another run. During COVID, obviously, it had some sort of like unbelievable run because it was in the center of the COVID shots and stuff. So it had this like massive upside, 120% or whatever, where you just don't quite have that. So that's the pros and cons of stock picking individually. If you catch a good runner, it can be a monster trade. If you are stuck in the wrong thing, it can be annoying for a long time.
It's funny because Pfizer to me looks like a bond chart.
It does.
We had 1, 2, 3, 4 years to the downside. We had a break-even year. Now, to be fair, they do have a 6.64% dividend. So even being down about 6%, you still netted something. It's up a little bit this year. I mean, that's a good thing for Pfizer to kind of stabilize here around $25. I am long Pfizer. I've got ratio spreads. I've got trades down to $20 where, I'll take a little bit more. I recognize that back in 2008, we were down to $12 a share. I don't know what the big plan is for Pfizer. I do know that, let's go. Where is this guy? So I think fundamentally, we're looking for like a $60 stock price. I mean, Snowflake looks pretty good. Dividends, earnings forecast to decline, which I don't love. I wish they'd get in like the GLP space and do some freaking Ozempic or something. 15 times earnings and, fair value with cash flow at like $60, $56. So look, my break even is low 20s. I mean, even if I was going to say, okay, we get to 30. If we take this chart, let's go back from the, let's go to a weekly chart. Take this huge swing right here and just say that we just pull back to like the 38%.
Yep.
So this high of 55 down to the lows at 20, just over 20, a 38% pullback gets us to $34. I will dump all of my shares of Pfizer if I'm at 34 because I've been basing here. I've got a couple thousand shares. It's worth it. I mean, to me, that's a good trade because what Pfizer could do is this. And then eventually Pfizer breaks the structure and then we do get back to all-time highs. But,
right.
If we get this move, I'm not going to sit here and hope that we go to, $45 to $50 when it might just be a multi-year trough that's got to build itself over time. And this accumulation eventually gets a breakout when nobody's looking. But so far, I mean, 6% dividend's okay. It's beat up enough where I'm hoping it's not going to get worse. And we'll see if it's a moneymaker, but it just doesn't look good on the stock price.
Yeah. And that's the thing too with stocks and options. You also have the opportunity to potentially play for yield, right? And that's what you're talking about, where you've got, okay, you're getting paid the dividend. If you're playing some options, you could potentially sell some premium. And then as you pointed out, if you get a little bit of a run on the stock, maybe you just take that as your chance to exit. The kind of your own variation of the wheel strategy. It makes sense. And I, Pfizer is definitely the type of stock that I would like to do that kind of thing on too. So there's all different types of ways to play the markets. And one side thing is, in a bull market, you might look at a Pfizer and it's down and it's sideways and it's not doing anything. It's very, what are you doing, right? What is so boring? Why aren't you in Apple and Amazon and Tesla and all the exciting stuff, the Palantirs of the world? But there's also a case to be made that Pfizer could look not too much different than how it does right now if the market itself actually had a rollover period, right? So you could continue in that kind of range and playing the yield game,
right?
And the market's down for, a year. That could be a really nice scenario. It hasn't happened in a while, but it will. At some point, it will happen. We don't know when, but at some point, all the yield traders look like heroes for a little while, and then they'd stop getting made fun of, right? The SCHD.
Well, that's this year's small caps. This year's small caps, mid caps. This year's value, like maybe they'll feel a little bit smarter. Which again is fine. It's just funny how many years you see people that are talking about the same thing over and over. Like how smart does Peter Schiff look now?
Looks like a genius.
10 years of literally arguing with everybody in the industry, he finally looks like he's smart, and he's telling everybody about it now. So I mean, I appreciate conviction. There's something to be said about persistence, but it's like, my gosh, dude, like, stop. I mean, I just don't know how you can be like a one track minded investor when there's a lot of ways to play the game. And I mean, I try to when I try to teach traders, it's like, look, if you have a go-to strategy for up, for down, for sideways, you can trade any market. Fast or slow, you can trade any market. It doesn't have to be, crazy complex. It's like, but just something that lets you participate in the markets up, down, sideways. That does help. So anyway, Pfizer's not going to make anyone excited because it's super freaking boring. However, I think, like you said, I think it's great for the wheel strategy. I don't know what the premiums look like for, you probably have to do some leaps on this thing.
I don't think they're huge, but the idea of like taking assignment, getting the dividend, selling calls out of the money, there's a lot you can do with
you just
it,
have to throw some puts at it. I mean, one thing I would consider doing right now, it's like, okay, we're at 25 and change. If I like it enough to say I'm willing to own some shares, I mean, here's actually a decent play. I could go 23, 25, and 20 and say I'm willing to own up to 300 shares of Pfizer. My break-even price would be should be just over, I think it's right up at 23 actually. So 22.66 plus the premium that I get, I'll pull off, let's see, $4. So 4 minus. All right. So I could own, if I took this trade right here, Nick, I'd get about $390 of income. I would own the shares break even at 21.32. You look at the chart on Pfizer. If I own shares at 21.32, I'm down here near the lows, which was the April 2025 lows. I'm near those lows. I'm getting a 6% dividend or more. And if there's upside, right? If there's upside appreciation, great. So if I own the shares, okay, then I hopefully have some upside to the 30s, like I talked about. If I am willing to own the shares, my break even's 21, And, even if I own the shares and we go out, let's say, this is probably a stock you want to go out like 30 to 45 days minimum. So here's a 45-day expiration. If you trade something at the money, let's see if this option chain will load up. At the money, I would say if you can get, I don't know, like 50 cents or $1 every 30 to 45 days, like you lower your cost basis, you pull in some income. I'm sure why that's not loading, but I'll take a look at this at opening bell. Honestly, I'm kind of, as I'm saying this, I'm kind of talking myself into the trade for.
Well, here's my question for you, Chris, because this might help you with the thinking. Is that the type of, so when we talk, you do a lot of index options, right? You're playing SPX, you're doing all that sort of stuff. But when it comes to individual stocks, is that the type of play you like where it's kind of a yield play where you're talking about good value companies trading on sale, you're selling puts so that if it goes down, you're not only getting it at lower share price, you're also getting it at higher dividend price or dividend yield, right? Is that where you typically live with individual stocks, or do you also play, the high or the high beta stuff, or do you stay away from that with individual stocks? I'm just curious.
It's both. I mean, I'm trying to think. So last year, here's some of my, I certainly have some like higher dividend value plays. MO is one of them. Pfizer is one of them. Those are probably the two big ones that I've been in and out of the last, 3, 4, 5 years with doing exactly what I just said, which is, stack up some puts, and then once, if I own it, then I repair it aggressively, and because I don't like to own stocks for a long time. If I want to own anything, I want to own the SPY. I want to own the Qs. I want to own things that are designed to go up and also limit volatility because it's the broader market, or it's the haystack. But when it comes to trades like last year, I mean, man, I had individual like income plays on Oracle, profitable because I used this low. Like I used Liberation Day lows for a lot of levels last year, and even though it wasn't a ton, it's like this trade may be $130. And I did that on 17 accounts. This trade for Palantir was using multiple lows on Palantir, doing the same thing. This trade on HIMS last year, multiple times. And I was using it's like I just use April lows for a lot of my income trades out to December of 2025. And they all worked. Even though this thing was literally down towards that level, it still worked. Yeah. So, I mean, I pick. I mean, that's when I pick stocks, it's that I pick for an income play, not really an ownership play, because if I own, I typically own and repair. When I say repair, it's like let's say I own HIMS and I get assigned. My goal on this is to flip it for like maybe $5 a share and make $500. And if I did that in 1 to 4 weeks, it's income, and I get rid of it and I go find another trade. One thing I did get assigned on last year is after we had the split in Chipotle. I had a bunch of puts on Chipotle. I have them covered at $40. My break even was like $37.50. Now my break even's down to like 33, and I'm getting called away hopefully at 40. And great. I mean, I'll repair it for maybe $700 on my 100 shares, and I flip it within like a month or two.
Yeah.
So I don't want to own this forever.
Situation with Chipotle, right? Because it's been such a dog stock, but playing the strategy there, you've been able to kind of do well with it, even though it's really just kind of gone, here, down, back up. There's gains there for the options trader because you can, you can do all sorts of stuff. Anyways, we've got just a few minutes to go here, Chris. Maybe we can just talk a little higher level stuff market wise. S&P 500 rebounding here. What are the probabilities that's the end of the EU-US trade deal dynamic? You think it's is that probably behind us now, or and that's what the market kind of seems to be saying, like, all right, we've bounced.
Well, what do we have next week, Nick?
Fed meeting,
and we have Mag 7. So I mean that it's just be braced for a lot of volatility. I'm looking at the technicals here. I mean, this was a pretty clean rising wedge, and look, I could be wrong in the formation. This could go right up to all-time highs again, but I would ask you, like, how convinced are you right now at all-time highs that it's like, yep, that's all we needed was a 3% correction, this market's going to rip higher? Like, I'm not that convinced, man. We had so many good things that were happening. I mean, we're sitting at these like 1 percentile earnings in valuations. I mean, if this is a true rising wedge and the structure's broken down, we could have the retest and then a fail. We could have the retest and a poke to the highs again and then a fail. I just don't think the market runs crazy high. I don't think this is the end of it, because it's not going to stop at Greenland, dude. I mean, we're probably going to talk about Iran now, and then there's going to be crap in the Middle East. There's going to be oil prices flaring up. It's like, I don't know how this stuff talks. But like you said earlier, if we just wanted to do all the stuff in the US now, this is a good time to do it, to try to fix things. That comes with a lot of volatility. And look, there could be 10 things on the agenda and we just got a taste of one of them. So like if more of these things get rolled out like on a regular basis in the next 30 to 60 days, it's going to be a very noisy, like head spinning shift of, are we going to go higher? I mean, I think for traders, see the forest through the trees. I keep saying that all week because any opportunity I have to sell premium, the VIX is at 20 plus, I'm selling premium and I'm staying out of the way.
Sure.
Give me a lot of room for error.
It's one of the reasons I think trading the S&P 500 to the downside is so ridiculously hard.
Yeah.
Because here's the thing, or if you're trying, again, specifically to the downside, why it is so hard is gold is telling us right now that the market is saying what you're saying, Chris. It's mostly agreeing with you in the sense that gold has not moved that far from its highs.
Mm-hmm.
The market still thinks, oh yeah, there's still trouble brewing. We don't know what, but we're kind of expecting something. We don't think because if the market was fully convinced, like, all right, Trump has backed down, we're good, gold would be much lower than this. Gold would be crashing down.
Right.
Let's be very real about that. So gold is telling us, no, there's still potential, but the S&P 500, regardless, is still almost back to the highs. This is why it's so hard to short. It's because exactly what you said. Still going to get rate cuts. Earnings grow over time, and people are expecting strong Mag 7 earnings. GDP this morning came in higher than expected. I mean, you're in an environment where earnings are likely to continue to grow. So betting the downside is just so hard. So that's my take on it. Now, you asked a good question. Do you think there's, if you poked at new all-time highs, how good are we feeling about further all-time highs? And I'd say, limited upside just because, again, I think gold is telling us a story. It's been telling us a story. It's been screaming for a long time and no one's listened. And, maybe I do still think that it is fair to think, VIX volatility could remain elevated for the first part of this year. I'm leaning more into the idea of like, we could get a shakeup again. We could get a little bit of nerves sooner rather than later to still give us a runway for, for the midterms. So that's my thesis, at least on the geopolitical front for now.
I don't disagree. I think that just be prepared for noise. Like I said, you're going to see a lot of my trades this year for pulver alerts will be, man, he's trading this like $100 lower than price. He's trading this, 30, 40, 50% lower than price. I know that's intentional because I don't want to be shaken out by like these 5 and 10% oscillations. I could see that happening all year in the S&P 500 as well. Mm-hmm. We have a plus or minus 5% for many, many months. We have plus or minus 10%. I don't want to play in that, dude. Like, that's not the chop fest I want to be beat up by. I want to be out of the way. And if the market went absolutely sideways, I'll just be collecting nice little income trades way below that with safety. And if I took any ownership, then I'll repair it. And that could be, I mean, I took a trade this week in the SPY. I'd own the SPY like 30, 35% lower. Okay. Yep. That's a great place to start. Whether you want to flip it for income or you want to hold it for long-term gains and get 55 to 60% of the upside, that's a great place to start. So a lot of those trades will be probably what I'm focused on this year, because if premiums are up with elevated volatility into the VIX 20 plus, you can get some really good trades. You really can.
Yeah, no, I'm with you on it. Chris, we're out of time here. We got our next show starting in just a second. Before we do that, let me just let everyone know here, of course, about our current discount that we're doing on the VIP membership. It's a great time to join. You can get access to the trades that I'm sharing, as well as Chris. He has a pulver alerts service inside of our group, so he's trading, indices, and he trades a little bit of everything: futures, stocks, options, Forex, commodities. You can also see the trades that I'm taking, like this, Nikkei trade that I'm in, which is starting off right. I'm still trailing stops on gold. Got some Forex runs that I'm looking at, stocks and options. I would love some dips, but we're still going to keep an eye on that. Anyways, if you want to get access to the trade alerts, they're currently 40% off. Everything in our memberships section right now is 40% off. That includes the pulver alerts. It includes the VIP group. If you have questions, if you're interested in trading with Chris and I inside of the group, here is your information to do so. Click the link that's just been dropped in the live stream chat to speak directly to a member of our support staff who can get you set up with a membership, and you can come trade with us inside of the group. We'd love to have you in there. Chris, thanks very much for coming on, man. Happy rest of your day, and thanks for being here. We'll see you next time.
All right, sounds good. Thanks.
All right. Up next, we got Miko Audu. Stay tuned.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Okay, what's up people? Welcome back. Hope everyone's doing good. As always guys, I've got a bunch of markets to get through today. I've got some pairs, some markets which I'm quite interested in, so we can dive into that and we can go through them quickly. But of course, if there's any recommendations, any markets you guys are trading or just interested in, feel free to drop it in the chat and of course we'll take a look. But I do have a position open on the NAS. I've been very interested with the NAS over the past couple of weeks. I did take 2 trades earlier this month. I did take two losses as well. Potentially got in a bit too early there, but I still do like the proposition here. I still like the opportunity, and looking across the board, I actually do like what I'm seeing with the S&P, and I actually do like what I'm seeing with US 30, but I chose to get back into the NASDAQ. So with this one, I'm looking for simply just the recovery of price back towards its prior all-time high around 26,200. At the moment, we're looking okay. Momentum's picked up. We had a very nice strong daily close yesterday, and essentially all I wanted to see is price maintain these higher lows. And if you go take a look at the S&P and US 30 as well, you see similar price action, similar market structure as well. But the key thing for NAS was to maintain this low. Now if price did break through that, then I would lose that bullish bias quite quickly. I would be looking to short the market, but I would say okay, probably at this point in time there's a good chance that price potentially could push to that low, and then potentially price could maybe break through that, and we could be seeing a much bigger pullback than expected. If that's the case, then I don't really want to be jumping in front of anything. If we are going to maintain this low, which of course at the moment is what is looking likely and what I'm currently betting on, it does look like we have some room to the upside and potentially a push back to the high. Now risk reward isn't fantastic. It was better on the previous positions I had, but unfortunately, because of the deeper correction and just the way the candles are formed, I'm going to have to lose a little bit of the risk reward, but hopefully if the position does play out, we'll make up for it. Now, if you take a look at the S&P and US 30 as well, we're seeing pretty much the same price action, which is we've had this gap. Prices look pretty bearish at the start of the week. We've seen potentially some early buyers getting liquidated there, but has anything changed to warrant not looking to buy the S&P? Has market structure shifted? Is the market too volatile? Have we broken through any key areas that say, okay, we are looking like we're going to have a deeper correction, or prices potentially maybe in a bit of a bear move, sustained bear move anyway. Yes, we've taken out some lows here, but nothing crucial, and we've pulled back into some more significant areas. And of course, with yesterday's reaction, really strong bullish engulfing there on the S&P, and US 30 even stronger as well, coming back into a more significant area, which was this consolidation, which gave us that last breakout as well. So all these major US indices pulling back into key areas, reacting very well, and we're seeing very strong follow through of these moves. So I'm betting on a continuation of this back to their high. So NASDAQ looked the best to me because it was further away from the high. I have been trading it recently as well, so maybe I was a little biased to that too. Excuse me. But we still haven't tested the swing high since October last year. So it's been a few months now where price is kind of just building up here, tensions rising. Are we going to have a bigger correction, or is price simply just going to go back and attack the highs? I do think we'll probably get the latter there. So in terms of my trading, that's really where my focus is. I've been looking at gold and silver. I was looking at silver actually quite a lot the past day or two. I was looking to see if we can get a slightly deeper pullback into this area, because we had the gap again going into this week. Well, as the week opened up, we had the gap. So I was looking for a bigger correction to see if we can come back and test this area. Not quite. I could have taken the position, but it wouldn't be deep enough, and my stop loss would be a little bit too big for my liking, primarily because the high of silver is right there as well. Of course, I would expect price to break through, but just in terms of risk reward back to the high, didn't really make too much sense. And then gold's been super bullish. We've seen a little bit of a correction, but not enough to justify me to jump into any positions yet. So I'm being patient with gold as well. We've got the infamous 5K just above our heads there. It looks like gold is on a one-way path to go and test that area. And of course, silver's got 100, probably even closer, just above our heads there. So we're hitting potentially two massive psychological levels for both of these metals. And I don't see much slowing down until we get to those areas. And of course, we could go a lot further as well. But in terms of the market's real opportunity, I would say indices look good. Of course, just because of the current bull cycle, gold and silver make a lot of sense. I'm not really the biggest fan of any of the major currency pairs right now, just because my bias on the dollar is quite skewed. I have been looking at the dollar quite a lot, and I'm just not impressed with the price action at all. And one of my main kind of goals this year is to be more ruthless with opportunities that just are not quite fitting the build, not quite, giving me that quality, and focus on the markets which are giving more quality, which I would say indices are looking much better. And of course, gold and silver have been looking absolutely insane for the past 2 years now. So with USD pairs, what's the game here? Well, if I was looking to trade it, I would keep it very short-term bets. So I wouldn't be looking to swing trade dollar right now. Of course, this is purely from my personal view of dollar right now. I wouldn't be looking to swing dollar right now. If I was going to trade it, it would be quick day trades, which I'm in and out on the day, just because the direction is not quite clear. You can see price is stuck within this range, which automatically means we're going to have more uncertainty. There's less direction at play on a bigger scale. And then if we look at the price action over the past few days, we've been bearish, and then suddenly we're bullish, and now we're bearish again. I know price is kind of rejecting some of these areas and rebounding off them. But again, direction is key. If you don't have direction, then there's no point finding an entry. There's no point finding a stop loss. There's no point finding a target if the direction isn't clear. So because of that, I would be very careful trading dollar. And like I said, if I was going to, which I'm not, but if I was going to, it would be very short-term moves. I wouldn't mind potentially a push back into some structure here. We've had a very forceful move down. We could see perhaps a correction and then maybe a follow-through off the back of that. But would I bet for a push back to those lows? No, I wouldn't. I don't have the evidence to support that. So yeah, USD analysis, I'm being very reserved on, because price action is not great. Looking at some of the major currency pairs, pound USD as well, we're kind of in that awkward situation where you could call this a range, and I wouldn't argue with you. You could say we're in a slight bearish channel here, and I wouldn't argue with you as well. Potentially we are forming a lower high to push back down, but we're not really seeing the conviction. You can see the way we formed this high here, really nice wick to the upside, and a very aggressive push back down. Here we're kind of seeing a corrective slow push. Doesn't mean we can't eventually pick up steam, but would I be confident to bet on that move then, knowing that, okay, we are still quite flat as well, and of course knowing what the DXY is doing too? No, not really. So again, if I'm looking to play pound USD, it'd be more short-term play. Could I look for a move back to support here? Potentially. I can see price struggling at resistance. If we can crack through support here, then yeah, I would say there's a legitimate expectation of a push back towards support. But again, you're looking for a short-term trade here, which potentially lasts a day, and then you're done. Of course, you can hold positions to see if you continue. That's a different part. That's management. But just in terms of real expectation, I'm not looking for any big moves here. Pound, Aussie, okay, Aussie's showing some momentum, and across the board, Aussie's very strong at the moment. So, pound Aussie, Euro Aussie, Aussie Swiss, all of these are getting affected. So there's some momentum there. But again, is Aussie dollar the best USD pair is the best Aussie pair to trade? not in my opinion either. It looks like we're coming back to some really significant structure on the daily weekly chart. I want to see how you interact with that level. It could be a nice place to start looking to position for some sells, and as well for a swing trade as well. But again, I want to see what we do at those levels first. Of course, we could still very much break through. So USD pairs, I'm not really liking at the moment. Let me see some chats. What's up, Andrea? Hope you're doing good. Pound USD short. Yeah, like I said, short term, I can see the logic there. It's just I don't really have the evidence to support like a full swing to the lows. Of course, I'm not sure how big of a trade you're looking for, but yeah, short term I can see that back to support. It makes sense. Price still failing at highs there, and we do have this kind of very slight natural kind of lower high succession here, but again, the market is really choppy. So would I look to try and bet for a really big follow through? No, unless I've got a system that will allow me to take profit along the way and knows that it's unlikely to happen. Not necessarily unlikely to happen, but I'm likely to book profits to protect myself, basically. So yeah, if you're looking for pound USD, some follow through back to these lows, I can see the logic there. Anything further is a bit more hopeful, in my opinion. What's up? Trade like a trader. Trade like a trader. Trade like a tiger. What's up? Hope you're doing good. Welcome to the stream. Let me see. What's up, Bashi? Hope you're doing good. Yes, we could take a look at oil as well. Aussie Seat Chef, UJ. Okay, yeah, we'll go through some requests. So yeah, oil's been interesting. Oil's been interesting because we're very bullish. Then we had like a very aggressive correction, but now price is kind of doing this kind of weird dance. It's very, very sideways, not really showing momentum back to follow through on this move. Because essentially we either got price has made this really strong bullish move to have a correction and then to continue, or it's made this move and it's kind of just it's essentially a pullback of the bigger bearish move, and potentially price might now be in equilibrium again. It might start to continue lower. I'm not completely sold on this follow through, so I'll be very careful of that. And of course take into account that the market is actually very bearish in the higher time frames. I know we have rejected support recently, but we've been super consistent with these lower highs. So would I really try and bet on follow through to the upside there? I would think I'm going against the grain there a little bit. I can see the logic, but I would feel like I'm going against the grain there a bit, and I wouldn't say that's an opportunity which I would bank on again for a big move. Short term, that's different. You can be in and out, take the profit and run. Potentially there could be a short-term buy opportunity as price comes back into demand here. There is a slight uptrend coming into play with these higher lows. This could be a logical push back into resistance, but again, I would fear that is a possibility. And again, it's not necessarily knowing about the future, knowing that we're guaranteed to continue. It's about making educated assumptions. Okay, if I can take a trade here, where's the next logical place? Well, it would be here. So that's the area I'd watch out for. If price does fail at that level, can I look to lock in some gains? Can I look to protect myself a bit? If price breaks through, we have a big candle, great. Next logical target would be a push here. So I would say I am quite conservative bullish on oil at the moment. Still respecting structure here, but again, I'll just be very cautious. I know I'm against the tide and the higher time frames, so I don't want to be too optimistic with the buy. And of course, if you do start to break back below, well, I'll quickly turn bearish again. In terms of Aussie CHF, then we'll take a look at UJ. Aussie CHF was a pair I was actually trading at the start of the year. I did get trailed out of this one. I had a buy back over here. Had some nice profit, but then I got trailed out here. Looks like we're seeing the follow through now. I was actually looking for some re-entries, but I just didn't like the entry here because we're coming back into this range. I like the pullback, came back into some structure, but I was buying straight back into this area, so I decided not to take the trade. Now that we have seen some follow through below it, I wouldn't mind this as an opportunity. The reason being, we have been very, very consistent with these higher lows now. You can kind of gauge it with this trend line. You've got a low there, another higher low, another one. Momentum looks like it's slowly picking up. It looks like we've broken out this consolidation and left it for good. potentially. Where's the next logical target for Aussie CHF? I would say it's back at this high, so you've got some distance to work with. If we break through that, then I would say it's this kind of area here where we saw all that momentum really aggressively come through. So there's some logical targets to work with. We've got momentum picking up on the daily, on the higher time frames. So yeah, I would suggest if you can get some healthy pullbacks there to kind of retrace this bull leg, then if you can maybe drop to like an hourly, you can actually make this a really nice risk reward. Again, if there's follow through, there's opportunity to really stay in the trade as well. So Aussie CHF, I like it. Of course, a lot of Aussie strength at the moment, and it doesn't look like it's kind of just strength out of nowhere in terms of, okay, I'm expecting that strength to fizzle out. This Aussie strength has been slowly creeping into the market over time, and it looks like we've still got that momentum on our side. So it's a legit momentum play there, I would say, for Aussie CHF, and of course pound Aussie seeing some selling pressure there, Euro Aussie as well. So I think looking for Aussie longs on pullbacks makes a lot of sense, provided we still maintain structure. And in terms of the yen pairs, they're being very crazy. Dollar yen I actually do like. Now I was quite watchful of dollar yen because I said, okay, price is still trading in major resistance. Do I realistically want to be buying here? No, not really, but I do appreciate how bullish dollar yen is on the higher time frames, and I would expect to see price actually take out this high and possibly go and take out that high there as well. So judging on momentum and just how higher time frame structure is playing out, I do think more upside is very likely. Yen still looks very weak as well. And I like the fact that if I drop to the low time frames, these higher lows are just being maintained very, very well. Equal lows back over here. And then since then, just successive higher lows, one after the other. And now again, we're starting to pick up momentum. So we've got a very kind of protected downside here. It's going to take a lot of effort for the bears to really kick in and push price lower. So I know if I can catch a pullback here, there's a good chance we do respect structure and we do see price follow through back to resistance. How far I look to take the trade, again, that would be subjective. I would say that's the next big target there for dollar yen. That could still take a while before we get there, but who knows, the yen pairs can pick up out of thin air, can't they? So yeah, I do like dollar yen to the upside. The only kind of risk with this one is that we are kind of trading into resistance then, and we could just see selling pressure kicking at any point there. But in terms of market structure, momentum, and especially if you're looking for short term, I think that's the best play. If you're looking to try and hold for a few days, it's just a bit of an awkward place to buy. But if you can find a pullback and a trade for like a couple of days or even less, I think that's a really nice place for a buy, and it makes a lot of sense. You got higher time frames agreeing, momentum agreeing, price action agreeing. The only thing I'll be a bit skeptical of is USD actually strong? Is it just purely yen weakness? At the moment, it does look like it's purely just yen weakness, because I mean, I wouldn't say dollar's necessarily weak, but it's leaning on the weaker side in terms of right now. So yeah, dollar yen I think is a smart buy. But again, I will look for pullbacks, and I wouldn't be trying to swing that trade too far, at least not initially, because of where we're trading in some serious resistance. Yes, Aussie is very strong, and NZD as well. NZD is strong too. I've had some pairs on the watch list which I'm kind of looking to reframe. So New Zealand dollar I was coming to the week pretty bearish on, looking for some shorts. I didn't see any follow through, so I didn't get any positions in. And I'm glad I didn't, because this is looking very, very bullish. But essentially, the plan was coming into the week, I was looking at this range here. I said, okay, we've got bearish structure at play. There's either one or two things that will eventually happen with this. It's either price will continue being bearish or it reverse, keeping it very, very simple. So all I'm waiting for is for the evidence for price to continue the trend to be very, very high. And when it's very, very high, that's the time I want to place my trade, because I've got probability on my side, and then I'm looking for that bet. And the condition of that was price breaking through this support level. So coming into the week, this is where we open up for Monday. This was prior week's price action. So I said, okay, there's a lot of support here. We're really struggling to break through, quite corrective. If you look at the prior highs we've created, they've all been quite aggressive. Price will pull back and it would just shoot down without much trouble. Now we're actually experiencing a lot of trouble. So that tells me that, okay, despite this pullback, despite the fact that we're holding the trend line, the market is a bit tired here. So I'm not going to just blindly short just because the trend's still in play and this could be a lower high. I want to still see evidence that momentum is still at play. And that wasn't really shown to me, the fact that we didn't break support. And of course, with Monday's candle coming, it was like, okay, yeah, the buyers are really stepping in. And of course, since then, we just follow through to the upside. So the shorts have been completely blown out the water. And now that we're seeing price really break through this, of course, I'll still wait for this week's candle to close. It is Thursday, and Thursday's looking very, very bullish. So I'll still wait for Thursday and Friday to close. And if that is the case, then that tells me, okay, probably at this point, we're not going to see the continuation of this bearish trend unless we have a crazy recovery here. Next week's candle just comes straight back down. And unless we get something like that, then the path of least resistance, I would say, for New Zealand dollar will be a push back to this high here. There's not a lot of obstacles in our way. We're breaking through significant resistance. The trend line's gone. The likelihood now is price to continue high. So I actually do like New Zealand dollar to the upside. I did say I'm not a fan of the USD pairs, but NZD USD is not a bad option. The rest though, Euro USD, that looks horrendous to me. I'm not seeing much opportunity here. Dollar CHF, very flat as well. Pretty much the same situation as Euro. Aussie dollar, yeah, very, very bullish. And there might be some nice pullbacks to buy. But again, we got big resistance we're coming into very, very soon. I think New Zealand dollar looks way better. Pound USD, I think, again, this looks very, very awkward as well. Again, you could just consider this as a range and just be very careful trading it. Dollar yen, I do like dollar yen. Yen is purely, again, the yen weakness at play, not so much USD, but I would say, yeah, dollar yen actually looks not bad as well. Dollar CAD's an interesting one. Dollar CAD pull back into some structure here. It's reacting pretty well. But again, I'm not the biggest fan, because if I just zoom out a little bit, I would say this is just very flat price action. So I wouldn't really trust dollar CAD to give me that follow through all the way back to that low. Excuse me. Not that we can't get there. It's just, again, very awkward price action. I can see us finding support and just starting to move a bit weird. Excuse me. So yeah, out of the USD pairs, New Zealand dollar would be my winner there. And a push to 0.6 makes sense. And of course, we've got that kind of correlation. Aussie being very strong, New Zealand being very strong as well. If that can follow through, that sustains, I do think there's an opportunity here next week back to highs. But the best opportunities right now for me are with the indices. So I'm going to sit on that NAS trade, see how that progresses. I'm at a position where with this NAS trade, if it does roll over and go and hit my stop loss, I will lose the bias to be honest, because if it breaks through that low, then yeah, I wouldn't be confident in more follow through for NAS. But of course that isn't the case right now, so I'm looking for more follow through. Again, not really interested to trade S&P or the US 30 because I'm in NAS and very, very correlated trades if I was to take them all. But again, they're very much the same trade. So if I wasn't trading NAS, I would be looking to see if I can get in on S&P or US 30 or maybe some type of lower time frame correction. Most probably the S&P, just because it's got me a bit more distance back to the high than US 30. And then, of course, cryptocurrencies were interesting as well. I was looking to see if we can get some follow through for Bitcoin this week, but absolutely not. We did not get that. So it was very awkward because BTC broke to the upside last week. Again, everyone's looking at, is this the breakout or is this just, volatility and price not actually seeing any follow through? Of course, we've got the latter here. And now prices break underneath that low, which for me does destroy the bullish bias I had coming into the week for BTC, because we were maintaining these higher lows, and I just wanted to see that continue in that kind of fashion. And of course, since we got the break of resistance, that makes more sense. But now, of course, prices roll back over, taking out these lows here. I can't be confident in buying BTC anymore. Again, not to say that we can't still recover and push up higher, but I need price action to start to agree again, especially on the lower time frames. And of course, BTC is still trading in a very significant area too, so it's not all said and done. We could still very much find support and still push through. I'm still looking for a push into this area, but just being very, very conservative again, getting back into BTC. And then with Ethereum and XRP, same situation here as well. Very significant zone. There's an area which we could pull back into a little bit deeper as well. But these are areas where I would expect to see price find support and eventually push higher. So I'm bullish on cryptocurrencies in terms of where we're trading. I think this is an area where buying does make sense. It's just, again, I need price action to agree with me before I get back into any positions with cryptos at the moment. So yeah, being very careful there. But at the moment, like I said, the indices, gold and silver, I think that's really where it's at right now in terms of what's looking the most tradable. Currency pairs, yen's awkward as well because it's almost too bullish. Some of them are almost too bullish, like New Zealand yen and Aussie yen. They're too bullish for me, especially for a currency pair. If there was like, again, indices or gold and silver or metals in general, I wouldn't be too worried about them being too bullish because once they're in that cycle, they could really push through. And same with currencies, they have their time in the sun as well, but it doesn't normally end well, and it doesn't normally sustain for too long. So with Aussie yen, we've got major resistance we're pushing into. I would say I've missed the boat with this one if I was really looking to trade it. CAD yen is it's just gone on too long a little bit as well. I don't like chasing moves like this. We've really seen a lot of conviction. I want to see price really have a moment where it does take a breather, and that's where I want to step back into. New Zealand yen, this still has a lot of room to the upside, so I think this could be a really nice opportunity throughout the year potentially. As long as that yen weakness sustains, we could be seeing New Zealand yen push all the way to the highs there, as we've seen with some other yen pairs as well. But again, really big move, just breaking through structure. Is this the best time to be looking for a swing? I don't think so. I'll be waiting for price to kind of tire first, have that bearish move, and then we can start talking about maybe some longs there as well. So yen pairs, maybe just a bit too bullish right now, and I need some pullbacks for them. My type of style is not to really try and buy into where there's momentum, especially when I'm trading currencies. My plan is, okay, look where there has been momentum and look to see if I can, participate in the follow through. Right now we're in the follow through stage, so it would be incorrect for me to start jumping into any of the yen pairs. But again, in terms of opportunities, they could really provide some short term. In terms of right now, yes, but swing, I think maybe next month or whenever they pull back. I have no idea. We'll just wait and see. But yeah, it's primarily where my focus is. Only trade at the moment, just NAS. We'll see how that gets going. And of course, if something does change, I'll update you guys next week. And New Zealand dollar probably will be my favorite pair for next week. But we'll see if that changes going into the weekend. But guys, we have come up to the end of my segment. I do really appreciate each and every one of you tuning in. And if you have found it useful, go check out my channel. The team have dropped the link to my channel there, so if you want to check me out, feel free to go and do so. But thanks again for having me on. I hope you guys have enjoyed it. Take care, and I'll see you all next week.
If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show.
Hello. Happy Thursday. How's everyone doing? Hope you're all having a fantastic week. So markets are interesting. We've basically just seen continuations. I'm not really involved too much in terms of my positions, haven't changed since we last spoke. So I'm still in pound Aussie, which is running very, very well. We're now completely break even. We're essentially risk free on this position. The only real cost that we've now got is either we lose the profit that we've got and go to break even. But on top of that, we obviously need to account for the swaps and the fees for the position. Because pound Aussie is only slightly, it's not a huge expensive position, like something such as pound Swiss, but it is something to think about. But overall, generally speaking, it's a risk-free position now, so it's nice. And we are running in 2.25% profit, so all good. Basically just copying Nick's approach on this one, I'm not going to lie. The idea really is just to actually just trail stops above the highs that will form, or lower highs ideally. So yeah, all I'm looking for now in this market to scale in, because the thesis is still valid, which I can go over with you in a second if you would like. Here, there we go. So what I would expect is actually a slightly deeper retracement. Now, I'm not saying this is the bottom, again, just for explanatory versions or to explain. So from the previous high to what is currently the low, I would expect a pullback towards actually maybe the 61.8, possibly even slightly higher. Now, normally I don't say that. Normally, when I'm trading with a fib and I'm looking for pullbacks, I'll look for the 50% retracement, and that's sort of my baseline. That's the reference point I use. But in situations like this, where we've had quite a large move to the downside with very little activity, it's essentially very impulsive and very aggressive. It's not uncommon to see a lot of this left side to actually get corrected, and then we have a continuation. Whether that will happen or we continue dropping, I don't know. We'll see. But in this case, I would like to see this 61.8 level get hit, and then I can look to scale in, trail this stop slightly lower to somewhere like this, and then I can reallocate the risk that I did have for the original position into the scale in, and basically manage it from there. So that's the idea that we've got at the moment. Sluggy, hello, it's good to see you. Aizen, hello. Pound Aussie turned out to be a monster, especially with the huge job beat earlier today. Yes, indeed. What trade? I know it's a good way to start the year. You know what? I'll be honest with you though. Yes, it's good, but it's a good thing it's good because I'm having a terrible month. So basically, last week, was it last week? Yes, it was last week. I went on an awful losing streak with my scalping strategy. It was just loss after loss after loss. So I went from roughly a 5% gain for January, and I'm currently sitting at about negative 1.5%. So it's not good. Obviously, if you measure it from the peak of the month to obviously where I'm at now, the low of the month, that's quite a big percentage drop. So it's not been fantastic. However, we do have a nice swing position running. I do still have the Aussie New Zealand running as well. I entered this one with very small risk because I entered this quite aggressively for my strategy. So I was looking at this previous this previous level of structure, and we saw a little bit of a slowdown here on the H4. Now, fundamentally, speaking from a policy standpoint, the Australian dollar is significantly stronger. In fact, not just policy, in pretty much all aspects, I would say the Australian dollar is by leaps and bounds stronger than the New Zealand dollar. So I saw the slowdown and I went aggressive again. I don't use the 38.2 really at all, but I saw it there again, sort of in line with structure. We're still in a bullish trend. And we did also have the tariff situation going on with Greenland and things. So it was, again, aggressive, but worth the risk in my opinion. So we did come back into profit after this drawdown. However, we're now sitting in just below entry, but it's cool. Not really that well bothered about this position. SP500. I told you guys yesterday that I was in with a beta of 0.25. So essentially what that means is every 1% that the S&P moves, my P&L on this specific trade moves 0.25%. So rather than being, the S&P moves 1%, I gain or lose 1%, it's reduced by to a quarter. So it's just a way for me to basically build a DCA or a ladder, whatever you want to call it, whilst keeping the risk pretty minimal. So the return on this is quite small. I'm up maybe 0.3%, roughly. But yeah, that's that one. And dollar yen as well. We called, well, actually, I didn't. One of my guys at Elite Traders called dollar yen long. So we're currently in this one with a take profit just underneath 160, currently at 159.95. That's our take profit. The reason we're not going for 160 on the dot is because of the Bank of Japan intervention risk, which is still a risk anyway. But once we sort of hit 160 towards 165, well, maybe 165 is a bit of a stretch, but either way, 160 and above, in my opinion, that's a serious danger zone for, if we've not already had the intervention, I would really expect it to happen beyond that point. And that's kind of my cutoff. I won't be in positions long, short yen after that. Is that your target? No, the pound Aussie trade is more just trailing. So let me show you this. Now, this is, so I don't really show this too often because it's just words, but because I put print screens in, I don't normally include a lot of images in this. It's more just a way for me to keep mental track of what's going on for the trade, and if I want to trade, if I do want to take it, and if anything validates it. But in this specific case, I did decide to put images in because I wanted to share it with some people. So this is quite a good demonstration on how you can use the Edge Finder beyond just using top setups. So I explained yesterday that I use top setups as like my initial filter. So if something is, let's say New Zealand Swiss, for example, let's say I'm not, but if I was interested in New Zealand Swiss, this would be a filter. So I go straight to the Edge Finder, get rid of neutral, what's bullish, what's bearish, what aligns with my ideas and my current bias already. I saw pound Australian was down here and I was like, okay, interesting. So let me look into that further. And then the trade starts developing from there. And that's how I layer on my own analysis on top of the Edge Finder. So it's a case of going into the UK economy heat map, the Australian dollar, the Australian economy heat map as well, taking notes of the situation, or the current date, or the most recent data points, I should say. Then we go and look at policy divergence. Here, trading and positioning around the tariff situation. So this is something, I know this might be a little bit boring for some of you, but I think for those of you who are interested in actually learning how to go about trading in maybe a more serious way, this is one of these decisions that maybe a lot of traders wouldn't really think about or wouldn't notice, but it's quite important. Now, it actually didn't turn out to be that relevant in the end, but obviously when you're planning a trade, you need to think about as much as possible. So I initially wanted to short Euro Australian. So let me go over there. Oops. Here. Yeah, so it was basically the same entry. I wanted to short here. We actually had a pending order pretty much right here at these previous highs because it lined up with a previous fib level. From this high to this low there. Yeah, we had a pending order at 50, or the 50% retracement. However, I canceled the order very quickly once we started seeing the volatility kick in. So let me get back to the point. Why did I choose pound Australian over Euro Australian? Well, it's because the Euro makes up roughly 57, give or take. I'm not sure the exact number off the top of my head. It's around 50 to 57-ish % of the DXY basket. So that position inherently was just open to significantly more volatility and a bit more exposure to the swings and noise that we could have potentially had from whatever was going on with Trump. So pound Australian was the way forwards. Although the UK was impacted by it, it was negative. So moving forwards, policy divergence, obviously using the Edge Finder's interest rate projections, we can see that, let me zoom in for you, actually. Sorry, I can do that. So Australia is in blue, or the RBA is in blue, and the Bank of England is in red. The projections show the RBA holds rates throughout Q1 and then starts hiking Q2, Q3, Q4, whereas the Bank of England, Q4, and then Q1 is a hold, Q2, Q3, and Q4, we have that decrease. So that gives us that divergence. So that's a nice little fact. A nice little factor. Then we've got some inflation forecasts from the RBA government website and also the Parliament of the UK. And then it goes on to growth dynamics, PMIs, taking into account the carry. So how much am I paying or getting paid to hold the position on the real yields? Who's positioning where in terms of the COT and obviously the top setups as well. And that's kind of it. And then this is all I've got for technicals. That's the whole of my technical analysis, whereas the rest of it is all economic and what's actually driving the market. So yeah, that's it. And then obviously the developments throughout the trade. So what news headlines that we've got since opening it. Anyway, let's move on to something that might be a bit more interesting. Ball out. Wow, I've not seen you in a while. Hope you're good. Say it, DXY to 95. I just can't do it. Bank of Japan press conference today. This will be when they announce rate hikes. They're not going to announce a rate hike. Well, I'm saying that like it's fact. Obviously, I don't know, but the markets heavily and widely expect it to just be a hold. In my opinion, there's not really much room for them to hike rates. Any expectation on the yen? I think it's just going to continue down. Yeah, I think it's just going to continue down until we get an intervention. I think a potential rate, if they do hike rates, obviously that would be a very bullish event because the market hasn't priced that in for the most part. However, if they hold rates, there's not going to be any change. In fact, it might even support the yen to go lower, depending on obviously forward guidance, etc. But I think the only thing that can really drive volatility in would be either mentions of a major rate hiking cycle, whether they continue that path to normalization, or obviously we get the intervention. But interventions are corrected generally very quickly. It's more a chance to just buy dollar yen at a lower price, historically anyway. Joshua, hello, good to see you. Phantom, hello as well. Let's see if we roll over or continue to grind higher. Indeed. Let's actually take a look at the dollar index. Here we go. Yeah, so the H4 is not looking overly pleasant, to be perfectly honest. We attempted to start this uptrend, failed, obviously came down, retested these moving averages. Whether you want to call it a retest of moving averages, it doesn't matter. That's what's happened here visually. So yeah, I guess it's now a case of, do we break this next low or the previous low, sorry. If we end up breaking past here, then it's a case of, are we going to start revisiting these lows down here between, what levels are these? So between 97, let's call it 97.8, give or take, down towards 96-ish. So yeah, that's kind of the concern. Can we maintain these higher lows? Or obviously, as I said, are we going to end up breaking lower with the lower highs and lower lows? I like this analysis. James, do you trade relative strength? Yeah. Well, first of all, thank you. I'm glad to hear people like hearing that stuff. I know it's not overly exciting, especially when you look at things like crazy technical analysis and stuff. But what was my point there? Oh, do I trade relative strength? Yes. So the way I view currencies is, essentially, the markets are like an auction, really, aren't they? So you've got to figure out which currency is, I want to say undervalued, but I don't really believe in that. I think the markets are very efficient. But what market has what currency has the most potential to, first of all, be strong and maintain strength, or strengthen even further? And obviously vice versa, which one's weak can stay weak and or can weaken further. But then I derive that idea from central banks, growth, labor, inflation. But yeah, I'd say 75% of my biases for my positions are made from central bank policies and interest rates. Check out Australian dollar Swiss on the 1 hour. You're long. Okay. Well, I need a little bit more information. Where did you get long? Was it down here? If so, fantastic entry. If it was here, so far good entry, but it might be a little bit risky. But actually, having said that, let me see. I mean, I wouldn't really like it just for my style of trading anyway. However, I suppose that we have come down to this 50% retracement zone, seen a nice rejection and pushed to the upside. My only concern with that would be if we saw, or we could potentially see the market come back down, retest these highs, come a little bit closer, sort of have a short-term mean reversion into these moving averages, and then potentially head higher. But if you're trading the 1 hour, it's obviously a short-term trade, I would assume, so you might be able to get out anyway. Based on macros, very nice. I'm not sure if we've got an edge finder reading. Do we? Yes, we do actually. So we've got Aussie Swiss, New Zealand Swiss, CAD Swiss. Yeah, it seems the edge finder is quite bearish on the Swiss. Actually, let's have a look at the heat map. Here, had some losses scalping gold this morning. Watched the VWAP strategy and took notes implemented around US market open and made back the losses into profit. Thanks for all the work you do. That's very good to hear. I'm happy that I could be of help to you. That's good. Yeah, the thing is, like I said, I don't want to sit here and show you a fantastic pound Australian trade and show you different strategies for different time frames and stuff. So as I said earlier, I went on a pretty tragic losing streak last week on my personal account with the VWAP strategy, but on the other side of that, I actually passed the top step evaluation or top step combine the same week. So it was like, you know, I lost money on personal account, but I also got funded. Was it a bad week? Yes, but also no. You know, swings and roundabouts. Anyway, took a long on silver because of the put to call ratio. Okay, let's have a look at that in a second then. So, oh wow, Swiss 0%. I didn't clock this. Crazy, 0%. So what have we got going on? So GDP growth quarter on quarter surprised the downside by 0.1%. So it's obviously a bearish surprise. If the markets were pricing in a negative 0.4, came out obviously worse at negative 0.5, not good. PMIs also undershooting. Manufacturing PMIs, big miss actually, 4.1. What else have we got? Retail sales undershooting. CPI year on year is pretty flat. Well, is flat. PPI is kind of the only thing actually that is there. Well, sorry, I should probably say the only thing that's not red. And unemployment rate also not great. So yeah, maybe Swiss shorts is the play. I haven't really been focusing on the Swiss at all, to be honest, but yeah, that might be the move. I hope you're not planning on missing out on silver again. To be honest, I've not been paying any attention to silver recently. My focus is shifting quite heavily to copper. Yeah, see, I can't justify buying silver. So my previous position on silver roughly was I think it started quite early on. Well, early on, you know, relative. I think, don't quote me on this, I think it was around here or around here. It was one of these two dips I started buying. And I ended up closing, I think it was me. I can't remember. Anyway, I closed it. I missed a large portion of it. I might have bought maybe here and closed it here. I'm not sure. It doesn't matter. But yeah, my point, what I'm trying to say is that the way I want to trade silver isn't with a stop loss take profit. I want to buy and hold silver. So I want to see these lows getting tested. So pullback, I would enter maybe a very small position, pull back again, enter a very small position, previous lows, another very small position. And that's just my preference for this specific trade, because my forecast on silver was quite large in terms of the price movement I was looking for. I was expecting $100 by the end of the year. That's what I came into, ended 2025 with, came into 2026 with. Since then, we've rallied like crazy, and we're pretty much almost there. So first of all, my price target is almost been hit. And second of all, it's a bit too high for me to start building a DCA position. Okay, so let's have a look at the put to call ratio for silver. Crowd sentiment, put to call. Silver. High put volume, bearish sentiment, interesting. Strange. Why is that so high? Interesting. Yeah, maybe if you want to counter trade the crowd, then yes, maybe it's a valid idea. But just from a technical basis, for me, can't justify it. I think again, fundamentally, it's still completely aligned. But yeah. James caught gold at 4,300. Now planning to close at 4,500. Fantastic, Sluggy. Nice one. My best trade this week was pound New Zealand shorts. Very nice. Yes, the pound has been a very simple trade, really. As long as you could get into it, it's been a very simple sort of meltdown trade. Put to call ratio on silver is crazy. Yes, it is. James, I trade the same way, though I track interest rate futures from all the major central banks with expiry in December of every year to get a feel for what the market expects. That's fantastic. Yeah, that's a really, really good way to do it, cycling. Copper might be the play of the year. Yes. So I said yesterday I would go through copper with you. However, I was reading through my notes this morning because I was preparing to come on. And I was like, the notes I've got just aren't that great yet. In terms of, when I say they're not that great, they're just not that extensive to justify buying it right now. However, overall, China's GDP is holding up. Policy-backed electrification demand, U.S. critical mineral classification. Actually, going back to the policy-backed electrification demand, structural copper demand for EVs, grid build-out, data centers, and renewable integration is policy anchored and capex driven, meaning it persists through cyclical volatility. U.S. mineral classification. Copper was originally added to the 2025 U.S. critical minerals list in November, elevating it to a national security priority alongside lithium and rare earths, which creates a policy floor under demand. Bearing in mind, these are not fully developed notes or ideas yet, or what do you want? Analysis is what I'm trying to say. But it's just, again, the sort of starting point I've got at the minute. So slow, contained supply cycle. Mine development takes 5 to 10 years due to permitting. Environmental constraints and underinvestment supply cannot respond quickly, even as demand accelerates from electrification. But yeah, there's a couple of different points, but again, they're not fully fleshed out yet. So what my thinking is on silver, I'm going to get off high grade silver and we'll just go to, sorry, not silver, I'm talking about copper. So copper is currently around 5.7. Now, there is a potential first entry here. Now, again, as I said on silver, my idea is more long-term. So I'm not looking to have a stop loss take profit. I'd like to build a position over time with multiple smaller entries on dips rather than, again, trying to just buy one dip with a 1 or 2% risk. So this might be the first entry point, potentially. There's another entry point down here. And again, it's just basically buying structural levels or buying at structural levels. But yeah, there's a couple of different technical points. I mean, if we came all the way down to these lows, that would be one as well. Came down back to the sort of tariff move here. This was when we had tariffs on copper. So yeah, there's different points. Overall, something I found was copper is a very expensive position to hold for me, for the way, for the broker I trade on, which is IG spread betting. I've got I've got a few different options which I had to research, but just high grade copper is sort of the main copper asset, if you will, or the main copper sort of instrument. So I was looking into it, obviously doing the research, looking at the technicals, blah, blah, blah. It would be, I think it was £35 per night to hold if I went in with £1 per point or £1 per pip. I'm not sure exactly how it was measured on that market. But again, very expensive. So the way that I would have to trade this is with a futures market or with an ETF. So it could be a gold miners ETF, or it could be a high grade copper futures market, which would still cost, but not nearly as much. So I would keep that in mind with obviously trading markets outside FX. Obviously, we all know about swap fees and rollover fees and things, but brokers can charge a lot for other markets as well. James, Nicky Long are doing good. You know what? I watched Nick's video and I saw him look at this and I marked it out as well. So I kind of neglected Nikkei for a while. I had a few good trades on it last year, but since then I've not paid any attention to it. And I saw exactly what Nick was looking at. I was like, you know what? That looks really good. Bearing in mind, Nick and I trade in a very similar way. We both look at basically support and resistance, use a fib and wait for pullbacks and trade into the trend. And obviously we had the 200 moving average here. It was the stars were aligned. However, the reason that I didn't take it is because I don't have the same testosterone level. No, I'm joking. But what I saw, I'm a little bit more, what's the word? A little bit more demanding, maybe, of what I get from the market from a level that I want to buy or sell from. So when I'm looking to trade from the fib, I need to see something like this, which was obviously this bullish H4 candle that engulfed the previous candles, confirmed that buyers were in and there was buying interest in the market. I couldn't have bought here just due to the way that I trade, the rule set that my technicals have, because we didn't have an engulfing candle. We had this one that maybe could have justified it, but at the time I didn't feel like that was a good opportunity. And then obviously we had 2 bearish candles after that. So to me, at that time, it just wasn't great. It wasn't forming the way that I needed it to form. And we also had, or the main reason that was a big problem for me was because we also had the Trump situation, and obviously we had the what's it called? I can't remember what it was called. The thing yesterday that was streamed with Trump. So it could have gone either way. You know, it could have been very good, could have been very bad. I didn't want to take that chance, especially with my open risk that I had on Aussie, New Zealand, pound Australian, etc., etc. So there we go. But anyway, fumbled the bag on that one, but it is what it is. I think it's still a great market to be a buyer of. Basically, just buy dips. So yeah. I'm running into the end of my segments. Let me just do a quick check and see if I've missed any messages here. Got to be adaptable, James. Drop timeframes. No, it's just not really the way that I do things. Nikkei land's going good. Yeah, I'm short copper. The only metal I see bearish at the moment until February, March. Fair enough. Yeah, I mean, again, I've not fully fleshed out an idea on copper yet, so I'm not going to do anything at this moment. James, can you tell us best strong fundamental bias for swing setups from major, minor, and indices you're looking for next week or this week? To be honest, nothing's changed. So my bias, the one I had before we had all this Trump situation, is exactly the same. Nothing fundamental has changed. So I'm still very bullish on the Australian dollar. So I will be looking for 2 different things. Either I will be looking, as I said at the start of the stream, I'll be looking for either a pullback to scale into pound Australian, or I will then look at the euro Australian, which is it not here? Okay, hold on. So yeah, basically just buying the Australian dollar is my current sort of theme within my bias. However, we did just see that the Swiss is also getting a score of 0 on the Edge Finder, which also might be a play. But as I said, I don't really pay much attention to the Swiss on a day-to-day basis. So I'd need to do a bit of research on that to figure out if it's sort of a short-term thing, or could we expect the Swiss to continue to underperform. Don't sleep on that gas. Yeah, I did. I saw the drop on that gas. Was it last week or the week before? I'm not sure. That's where options would have been handy. I'm not sure. WEF, that was it. That was the word I was looking for. 2 minutes till news. Well, I think Alan is coming to take over, so I'll let Alan take over that one or cover that with you. Same with me on Nikkei. I just needed a little bit more of a pullback. Yeah, it's one of those things, Tiger. Sometimes it can really save your life, if you just wait for that candle to close on the H4, so you don't buy into a large bearish candle and just get destroyed within the next 4 hours. But yeah, the situations like that where it doesn't work out. I think Alan's on. I saw him in the chat, and normally he comes on after me, I've noticed. I think he's on. I'm not 100% sure. Well played, Max. Yeah, okay. Hello, A1 Trading. Hello, Nick. Okay, right. Ladies and gentlemen, I'm going to head off. Have a good day. I'll see you all tomorrow. Stay safe and don't get margin called.
Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing, up to 90%, and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show.
Hello everyone, welcome to my segment of the live stream, and ignore the last hello messages from A1 and Nick because I was testing out the chat. The reason I was testing out the chat is we're gonna change the approach to the giveaways. So what I used to do is I used to just post a code in my trading view. Well, now we actually have a link that you will click, fill out the quick form, and then you will be in the giveaway for this live stream today. So let me copy the form. We have the form right here. You're gonna find it in the comment section. So it's a jot form. So just click the link, fill it out, and you'll be in for the giveaway. I'll copy all of the names. I'll put them in a wheel that spins, and then the name that pops up wins the account. And after my segment, I will email you the actual code. So we will spin the wheel in 15 minutes. And now let's get into our analysis. So let's take a look at TradingView. Let me just put up my trading view. An interesting chart I want to show you for today is on the SPX compared to gold. So if you have been following Nick or me for a while, you would know that we like to look at the gold to silver ratio, but let's now look at the S&P to gold ratio. So this compares how the S&P appreciates compared to gold. We used to have a big drop, and then we had the GFC, which is the Great Financial Crisis, of course, 2008, 2009. And then we started to appreciate, or the S&P started to appreciate, and then we started to go back a bit lower. Now, this is the weekly chart. And one thing that I can spot here is I can spot the support level. So this is a pretty clear level of support. The gold has been exploding, absolutely exploding lately. S&P, not so much. So the S&P has been a bit stagnant. And we have reached this crucial level of support. So what can we expect to happen? This is, of course, not a guarantee, but it's an interesting chart that I wanted to show you. We can actually expect to get a bit of a bounce here, just as far as technical analysis goes, which means that the S&P appreciates while gold stagnates or maybe even loses value. It basically means a risk-on scenario. So when this chart is going up, it means we are risk-on. When this chart is going down, it means we are mostly not entirely risk-off, but we are more risk-off than risk-on, or a bit risk-averse. So definitely lately, from let's say from the end of 25, beginning of 2026, we have definitely been risk-off. Gold has been rocketing higher while the S&P has been stagnant. So I thought this was pretty interesting. Watch out for this level. Again, if you want to check out this chart on your own trading view, you can just type S&P and then you use the sign of division and then you find gold. Okay, so S&P divided by gold. That's the chart. Let's see what happens. I'll update you on the situation. I will bring this chart back up in maybe a month, 2 months, 3 months, so that we can see, because this is the weekly chart, so that we can see what happens. I personally would expect at least a bit of a bounce. So we shall see. Going for the watch list, I do have a trade on the dollar Swiss. Yesterday, it was doing pretty well. Yesterday, we saw some nice appreciation on dollar Swiss, so a nice big blue candle. Today, a different story. So today, we can see the price pushing back a bit, pulling back a bit. So still in profit. I still like the trade, and I still think this is worth taking or worth holding. If you go to the breaking news, to Financial Juice breaking news, and you go to market moving, you can see Trump formed the new framework for a future deal on Greenland. Won't impose tariffs that were scheduled for February 1st. So it looks like we have a full taco trade. Is this right? Yeah, dollar flying, S&P flying, gold going lower. Yeah, absolute taco position. But the biggest sort of taco statement was right here: Trump on using excessive force. I won't do that. So he won't put boots on the ground. He won't execute a military action. At least that's what he says. And now he says that he won't impose tariffs. So I don't know what to say. For traders, that's awesome because it's pretty easy to follow Trump. But for the general population, it kind of sucks because all of this flip-flopping back and forth isn't beneficial to anyone that's actually living in the States or in the EU. It just creates uncertainty. And you don't know, if you have a company, you don't know your profitability like in a week or 2 weeks or 3 weeks, because tariffs on, tariffs off, tariffs on, like wax on, wax off. So taco trade in play, dollar Swiss pushing higher, S&P bullish, dollar was catching a bit, but now it's starting to pull back a bit again. Gold, let's check out gold. Well, gold is definitely moving higher. We had a bit of a wick yesterday, but definitely moving higher. So the markets are not really reflecting a full-on taco position. But as far as Trump is concerned and his view on the situation, looks like the tariffs won't happen just yet. USD Swiss, that's my only position in the markets at the moment. Pound Aussie, would love to take a sell setup. We finally broke out lower out of this level of support. So I was watching this level for a couple of weeks now. We finally broken out with momentum, printed a bit of a wick, but I'm looking for a retest of this area. So I'm looking for a retest of this support right here. If we can pull back a bit, I will be pretty happy to execute a sell position at that level. So that's the game plan for the Pound Aussie. If you look at the Edge Finder, top setups, GDP AUD, you will see we have a bearish reading. If you look at the economic heat maps, UK looks pretty bad. Aussie looks pretty good. So Aussie, most of the stuff is coming out better than expected. And we have some Aussie news. So the unemployment rate actually went down by quite a lot. That's amazing. The employment change is pretty positive. So the employment numbers seem to be doing great for the Aussie. And I do think next week we have some Aussie news as well. Yeah, we have the inflation. So we have the inflation in Australia. I really, really like the Aussie. I'm considering buy setups, absolutely, but it's just exploded higher and I'm looking for pullbacks. So let me actually put AU on my watch list. Okay, it's already there, so I'm just going to move it higher. Pound Aussie, you know the plan. Aussie dollar. Let's see the Edge Finder as well. As far as the Aussie dollar goes, neutral reading. Okay, neutral reading. And by the way, if you haven't filled out the form yet, I'm going to post it one more time. Let me just copy it. Copy. Paste. So in the comment section, you will find the form that you need to fill out in order to participate in the giveaway. Okay, it's a jot form. Very quick to finish the form. Then we have your email information, and then we pick a winner in the wheel. Okay, so check out the link. The giveaway is in 5 minutes. Continuing with the scheduled program, Aussie dollar looks extremely bullish. I love the numbers. The fundamental data seems very good. Neutral reading on the Edge Finder, which isn't the best. I definitely want to see a bullish reading, or I would prefer to see a bullish reading. But if we pull back to the 20 MA, I'll get in. So even with the Edge Finder being neutral, it's just on the edge. I think number 5 is bullish, 4 is still neutral. So it's just on the edge, but I would be happy to get in, possibly even if we pull back to the level of support right there. So let me put on an alert. Where's my alert? Add alert. Yeah, that's it. Aussie, again, one of the currencies that I like the most going into 2026. I had a pretty nice position. Unfortunately, it looks like I closed it prematurely because this would have been a flyer, but it is what it is, part of the game. At least I managed to get some pretty good percentage out of this position, and it wasn't like a break even or a loss. Gold is the final thing that is on my watch list, the final instrument. Now, what I like about gold is I like the massive printing and spending in the US. I like Trump's big, beautiful bill. Inflation is elevated in the United States. Let me show you. So if we go to economic data, inflation, CPI, see 2.7%. That is definitely elevated inflation. What you need to know is central banks target an inflation rate of 2%. Anything above 2% is elevated inflation. Gold loves elevated inflation. And we have rate cuts planned for 2026. Although rate cuts are no longer in the major picture, I'm looking at Twitter, I'm looking at some of the traders and investors that I follow, and most of them no longer mention the Fed. They have kind of flipped to Trump and tariffs and Greenland and what else? The BOJ, Bank of Japan, and the yield in Japan, which is going crazy. But the Fed is still planning. Well, it kind of changed a bit, but we still have rate cuts scheduled or priced in for the Fed. So that's still in play. Gold, looking for pullbacks. So I have an alert set. I usually like to get in around the 20 MA, and I'm looking for pullbacks to the 20 MA. That's the game plan. Now, as far as the rest of the stuff goes, silver, I personally believe is a bit overextended. Okay, so silver to me seems a bit overextended. Kind of looks like Bitcoin, looks parabolic. I don't want to sell, but also I don't want to be a buyer in this market. If we pull back to the 20 MA, I also don't think I'll be a buyer. If you do some back testing, some research, if silver makes more than 100% in 1 year, usually the year after that is break even or maybe even negative. So in 2025, silver made much more than 100%. So I'm not expecting 2026 to be massively bullish on silver. I may be wrong. It's just the probabilities, but I want to stay away. My main focus is gold. I think gold is a much better play. I think gold is mainly an investment asset, while silver is also an industrial metal. And I think gold is a safer play because the price action seems a bit more controlled. It doesn't seem as crazy as in silver. Okay, so now I'm going to jump into my Google Forms. We have 32 people that filled out the form, so that is amazing. Great work. And I'm going to copy the names into my... I just have to ignore Nick's name because he created a test, sort of a test form fill out, so we don't want Nick to actually receive the free challenge. But let's do the first names. Okay. So let's see how this will work. Wheel of names. Okay. And now let me bring up the wheel. This is my first time doing this, so please give me a second to get everything organized. Wheel should be visible now. Yeah, we have the wheel. These are the names. I have the surnames as well. So let's take a look. And it's going to be Rodell. Okay, Rodell, surname. Let me check. Rodell Lamas. Rodell Lamas, I have your email. So after my segment of the stream, you can expect an email from me with the code to a free 10K one-phase DNA funded challenge. By the way, if you haven't won the giveaway, but you want to get funded with DNA, A1 Live gets you 25% off any DNA challenge. Okay, so code A1 Live, 25% off. This right here is my personal DNA 50K account. It's almost gone, so I'm pretty close to blowing the account, part of the game. I have 2 trades in. The current equity is around, let me see, current equity is around 45.5. A sell on GU, a buy on SPX. SPX is in profit, GU is in a loss. So it passed phase 1, passed phase 2. This is now the funded stage. It looks like the account will be blown. So I'm pretty close to the max drawdown. I'll just keep on executing, keep following the plan. If I do lose it, I'll just get another one. So in my opinion, the way I approach prop firms is prop firms are disposable accounts. For me, my main focus to build a track record is my personal broker account. But prop firms are there to get steady payouts, take the money out, and put the money in your broker. So DNA funded, I would say one of the best firms out there. And with the code A1 Live, it definitely has the best price when you compare it to other big names such as FTMO, E8 Markets, 5%ers. So A1 Live gets you 25% off. I highly recommend you guys check it out. I've had a really good experience with DNA so far, and I'm going to keep using them even after this account. That's it for the DNA plug. And now, time for some more charts. US stock market, S&P up, Nas up, Dow Jones up, Russell doing awesome. So I know Nick is in the Russell position. And if you have watched my stream from Monday, I believe, you would know that we are now in the market environment where gold should be flying, US small caps should be flying, and Bitcoin should be flying as well. US small caps are actually the Russell. The Russell 2000 is the 2000 small US companies. So makes sense. It's going higher and it looks absolutely bullish. DAX recovering, Nikkei doing pretty well. So what trade am I looking to take on the indices, you may ask? I'm focusing on the NASDAQ. So I do love the trade idea that Nick had on the Nikkei. I know he bought the dip somewhere around the 20 MA. That was an amazing trade. But I personally am focusing on the NASDAQ. And I'm seeing this coiling of price as, well, it's a bit of a problem for me. There was a triangle. We broke out lower out of the triangle. So we broke lower. Now we have recovered. I need to see the price go above, definitely above this level of resistance, and if we can, into all-time highs. So I need to see bullish price action, bullish movement. Looks like we had a rotation out of technology stocks into healthcare, energy, mining, stuff like that. But maybe we can come back into the Nas. Maybe that can happen. S&P seems a bit more healthy. So the S&P does look a bit healthier than the NASDAQ. But yeah, so far I'm not actively looking for setups on the indices. The DAX I did like, but we had a pretty nasty crash lower. So I don't see much opportunity for me personally. If I look at the Edge Finder and I go to top setups and I search up the DAX, we're getting a neutral reading, even a negative score, which I don't want to go against the Edge Finder. Absolutely not. That's sort of the worst scenario that I can do. Silver, we covered. Platinum, copper, nothing of interest for me personally. Bitcoin down on the day and went back into the range. So Bitcoin is back to sleep, I would say. Let me put an alert here. I'm actually looking at 100K. Now let's keep it at 100K. So 100K for me personally is a crucial level of Bitcoin. If we can't go above 100K, I will remain neutral to maybe even bearish. Oil prices going lower. We're getting a bit of a sort of a risk-on scenario, or not risk-on scenario, but some more certainty. You know, we had quite a lot of uncertainty with Trump, and now we have a bit more certainty. So oil prices going lower. When there's uncertainty, all prices tend to go up. When there is certainty, all prices tend to sell off. DXY, unfortunately, bearish on the day. JXY, not doing much at the moment. US yields flying higher. What about the JP 30-year? JP 30-year. Well, pulled back a bit. Now, you would think that this is a major concern. You would think that this is a major concern for the BOJ and, yeah, basically the BOJ, but they don't seem to be as concerned as many analysts think. So from my research and my reading, this is a big problem. This is a big problem for Japan, but the authorities in Japan, they don't seem to mind the long end of the bond yield going to 4%. So they just seem to be continuing on the same path. The interest rates, we have a BOJ event, by the way. If you go to the Forex Factory calendar, today we have a BOJ policy rate, monetary policy statement, sorry, tomorrow. But for me, it's going to be like this evening, basically. So they're planning to keep the rate the same. And their general guidance, they don't seem to be concerned that much about the bond market. What they are concerned about is USD JPY exchange rate. We are going higher, which is great to see. I'm very interested to take a sell setup. I would love to see an intervention. I think it would be a pretty simple and a pretty easy trade to execute. So if we go above 160, 161, I'll be very interested to take a sell setup going back all the way to this level of support, going back to 155, maybe even 154. So that's my game plan on USD JPY. If I do decide to take this position, you will of course be notified in the A1 trading Discord. By the way, dollar Swiss was a signal in the A1 Discord. Aussie dollar was a signal as well, this nice setup. If you want to join the Discord, get my trade signals, there is a discount code Marco, which gets you 25% off on the A1 Trading Discord and on the Edge Finder. So all of the links are in the description of the stream. I highly recommend you guys check that out. Time for the comments. Let me see what you guys are thinking. If you have any chart requests, put it in the chat. Will you show the wheel spin live? Yes, so we showed the wheel spin live. This was the first, by the way. So I have more accounts to give away. Every single day in my segment, there will be a DNA Fund Challenge giveaway until I run out of codes. So we'll be doing the wheel strategy, let's say, for the rest of the streams. At the beginning of each stream, I'll post a link to sign up for the giveaway. And then 10 minutes later, I'll post another link, the same link basically, to sign up. So just keep an eye on the comment section during my segments. And congrats to Rodell. I will send you an email after my segment. No more skill-based code winning. No. So the fastest hands no longer win the code. It is now purely by chance. Now it's a fair game. Yeah. So it's a bit more fair now because it used to be the lowest ping wins the code, but now it's going to be completely fair. Luck-based code winning. What's the deal with JPY? Why so weak if risk on is off? Well, that is a bit weird. You know, we're having a switch between risk off, risk on, certainty, uncertainty. The yen seems to be selling off, which is counterintuitive. So you would expect in a risk-off environment for yen to gain value. It's not doing so. That's pretty interesting. I think it probably has to do with the uncertainty that's happening right now in Japan. It has to do with a very, very dovish prime minister. The Nikkei is flying higher. The dovishness means the yen stays weak. The long end of the bond yields are flying, but for all the wrong reasons. They are flying higher because the actual bonds keep getting sold because of the uncertainty. So that whole uncertainty kind of erased the yen as the main risk of currency, if that makes sense. While the Swiss actually gained quite a lot of value. You can see the CHF when we had the risk-off event, when Trump announced the tariffs, dollar Swiss sold off heavily. This was a pretty big sell-off, a pretty big move. So the Swiss, still a safe haven. Yen, not such a safe haven at the moment. Interesting and a good comment. So definitely good to discuss it. Okay. Marco, USD is not reacting much on good numbers we had today. Yeah, so something I forgot to mention. Good numbers out of the US today. We had the final GDP positive, unemployment claims lower than the forecast, PC price index pretty much on the dot. So okay data, not really amazing data, but definitely better than the forecast and overall healthy. I would say the general state of the US economy is pretty healthy. If you look at the macro scanner economic heat map, US, so the US is doing pretty well, mostly bullish numbers. And it is just continuing. Aussie and NZD outperformance is weighing on the rest of Forex. Not much DXY weakness, more of Aussie super strength. Yeah, so Aussie is an absolute flyer for today. Aussie crushing the markets. By the way, Aussie is highly correlated with the metals market. So if the metals market is crushing higher, Aussie should follow in most cases. That's the general rule. I definitely want to get in this. I think it looks amazing. I think Aussie dollar finally started to wake up and follow the yield differentials, because if you compare the Aussie dollar with the interest rate yield differentials or the 10-year bond yield differentials, you would see a massive difference. But the price has maybe started to follow the rate differentials. You can find out more about this in the A1 trading Discord. I mentioned it quite a lot of times, and the interest rate differentials are really, really important if you're a Forex trader. GU, long gold. Time for a taco. The taco has been completed, so at least on financial juice. So we had Trump on using excessive force. I won't do that. We had Denmark rejects Trump demands. And then we had formed the framework of future deal on Greenland, won't impose tariffs. Okay. So big up Rodell. It was your destiny to get the challenge. Rules change and first winner. Yeah. GU. Yeah, GU. Let's check it out. Let's take a look at GU. GU, I don't like the pound. I'm pretty bearish on the pound. I do want to sell it. I'm looking at the pound Aussie to sell. I don't want to buy GU. I don't want to sell it either, but I absolutely don't want to be a buyer. Overall, it is in an uptrend on the daily chart. Edgefinder is staying neutral, which is a bit of an issue. So not my favorite pair at the moment. I personally would not execute a position on it. Interesting. I'll remember to enter more than once next time. No, we have someone checking the actual entries, submissions in the background, and he deletes duplicate entries. So be careful. Be careful with that. Okay, so that's about it. Aussie Swiss, that's going to be the last one for today. Looks bullish. Edgefinder, what do we have? Very bullish reading, that's amazing. Love to see it. We do have a level of resistance at 0.545, but not such a bad position. I actually think this is pretty nice. For me, I'm playing the Swiss through buying dollar Swiss. It's for me, a bit more predictable, if I'm being honest. But Aussie Swiss, not a bad trade. Not a bad trade at all. If you can get a pullback, wait for the 20 MA to catch up, I think that's a pretty good opportunity to buy the Aussie Swiss. So a nice example, and the Edge Finder is bullish, which is an amazing confluence. That's about it from me. Tomorrow, there's going to be another DNA-funded challenge giveaway, so make sure you guys participate. Good luck in the markets. Let's see what we get, and you can catch me in the A1 Trading Discord. Thank you. See you in the next one. Goodbye.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.